Good morning, everyone. How are we doing today? It is October 14th, and this is, of course, your daily financial news. And first and foremost, let you know why we're doing this at 6:30 this morning. First, it's because I have every intention of always trying to make this one of the first live discussions we do, so I got up early for you to do it. But what it really means is we get lucky enough to interview both Jonathan Twomley and Anna Kelly today. Jonathan needed to move his normal Thursday discussion to this morning. So we're going to talk to Jonathan at 7, Anna at 8, and both of those interviews will be live sometime late afternoon. No, yeah, early afternoon or maybe around lunchtime. Jonathan will be at 7, Anna will be at 8. My guess is both of them are up by 11:30, 12:30, but I always look forward to those discussions. They are a lot of fun. The expert series is something I know a lot of you watch, so thank you very much. Just wanted you to know that Jonathan and Anna will happen this morning. Second, this is the first day that we can celebrate together. The channel is now over 10,000 subscribers, so thank you very much. It has been quite the journey. I'm having fun. I hope you are having fun. Do me a favor, we're not done yet. I'm going to keep producing original content each and every day, daily financial news. Again, inspiration from Gary Vee and Nipsey Hussle. Not stopping. I've been doing this for 20 years. It's just now I get to talk to a camera and share with you what I have learned. So really, for me, today has been about bank earnings. Really trying to figure out what the bank earnings tell me. We have we have one really blowout number from today's kind of range. Some frankly misses. So this is something to talk about. So let's just talk about the crown jewel, at least by numbers. That would be Goldman Sachs. Goldman Sachs made $9.68 a share. Yes, folks, almost $10 in a quarter. The estimate was for $5.57. So I go back to yesterday and think, how can analysts miss it by $4? Right? They missed by $4.11 by my quick math. So that's pretty crazy. Really, their big beat was on bond trading. So that is something that has not been called out by other banks. Also, when you think of Goldman, at least I do not think Goldman and kind of your local branch, right? I don't see Goldman Sachs branches, every couple of miles like I would see Bank of America or Wells Fargo or your local financial institution like PNC Financial or something of that nature. So one thing that at least as I look at this, I'm going, okay, well, my first takeaway from Goldman is it looks like trading, whether it be equities or bonds, and not having consumer exposure is a good thing. That's the first thing I saw when I read Goldman. Then you go back and you go look at Bank of America, which is kind of the reverse, very sort of customer focused. They actually beat on earnings, but they missed on revenue. And they set aside $1.4 billion for loan losses. Remember yesterday where the bank was kind of reducing the loan loss? Now, I told you yesterday I've been watching to see what the other banks are doing. Bank of America raised their loan loss reserve by over $1 billion. That's nothing compared to Q1 and Q2, but it's one of those variables we have to track. They're not done setting aside debt or reserves for bad debt. Wells Fargo, probably the biggest disappointment of all the big banks to report thus far. They earned 42 cents a share on an expectation of 45, and they set aside almost $800 million for bad debt, loan loss. 769 million if you are counting. So it looks like the banks, again, that are close to the consumer, right? I don't know about you, but I would say Wells Fargo, Bank of America, very branch-oriented, very traditional consumer banking. Not doing very well, right? You don't think Wells Fargo, Bank of America, trading desks, right? You don't think that. So Goldman Sachs is clearly showing you that Wall Street's trading desks are working, which, if true, if all this comes to bear, I think Morgan Stanley is the last big bank to report. I think it's tomorrow. It might be after hours today, but I think it's tomorrow. So I would say Morgan Stanley is very close to Goldman Sachs. So we will see what's there. And then the last one that I wrote down this morning that reported was PNC Financial. They beat. They made 339 versus 212. But they too set aside more loan loss reserves, although it's relatively speaking a small number at $52 million. So it looks like about 70% of the banks that have reported thus far are setting aside something. Goldman, I didn't call it out, so I'm going to guess they did not set aside anything. But again, the closer you are to the consumer, the more lending you have done. The more lending you have done, the book of business means you have more opportunities for bad debt. It's kind of how it's lining up. The other thing that I saw in the numbers in Q3, which surprised me, deposits were up at every bank that reported it. From a low of 8% at Wells Fargo, even Wells Fargo up deposits 8%, meaning cash in savings, money markets, and checking, I would assume, to a high of 30%. I think at JP Morgan yesterday that reported. So again, it's amazing to see. Again, these are all Q3 numbers, right? So we know now that Q3 GDP number is going to be outstanding. It'll be the largest growth ever. But what has me scratching my head is not only do we see a big GDP growth, but savings is up as well. So now again, you could always argue that this is only part of the population. Lots of people don't have bank accounts. You could also argue, and probably rightly so, that the savings is skewed to the K-shaped recovery, right? If you are in the top of the K, you are setting aside more money and saving. If you are on the bottom end, you're consuming, you're spending everything you have, right? Because these 8 to 30% increases in deposits is a total number, not an average deposit, right? It is very possible that the average deposit is negative. It's just you have some very big depositors there. So it'll be interesting to watch. Other news of the day that I'm watching, it looks like Bed Bath & Beyond is getting more focused. They are selling off a couple of I call them business units. Christmas tree shops, Linen Holdings, and some distribution center to $250 million. Obviously, Bed Bath is kind of shrinking to grow, is how they would spend it, right? If you were their executives, you're cutting out lack of focus, maybe some slower growers. But again, they're raising $250 million. Again, any cash at this point for a retailer allows them to invest in digital and also allows them to get through this health crisis we're in. Walmart, first retailer that I have seen to kind of declare what they are going to do instead of Black Friday. Remember, Black Friday is an event that, frankly, is an American sport, right? It is that day you get up early and you rush somewhere to buy a discounted TV or something. It is very clear that that is going to be a non-starter this year. So Walmart has come out and said, you know what? We are going to have 3 events in November. They are going to start online. And, we are not going to push for that, doorbuster idea. This, again, is an evolution. And it is going to be interesting to see what other retailers do. Because, again, I see the Black Friday thing going away. No retailer is going to want the headline risk of being a super spreader event. So it will be interesting. AMC Theater is going to be in the news for a little while. They really have 2 options they are communicating. This was reported by Reuters. They're either going to raise cash or they're going to go bankrupt. Right? We talked about, I believe it was a cruise line yesterday, raising $1 billion, $500 million in common, $500 million in a convertible. It's very likely that AMC Theater is going to try that route. Right now, they have basically cash to get them to the end of the year. They have no blockbusters on the horizon. So they're in between a rock and a hard place. And it is very likely they're going to need to raise some money, and they should. The market is open. It won't always be open, but it is time for them to raise some cash so they can survive until the summer of next year minimum. Got a lot of Fed speakers on the docket today. I jotted down and counted 7 of them. It'll be interesting to see how much focus they put on additional stimulus. It is very clear, based on past discussions, that they see great risk to the trajectory of our economy with the failed execution of Congress. It will be interesting if they ratchet up the rhetoric and they point to significant downside. I think they're going to. I think the Fed and the Treasury feel like they have done the heavy lifting thus far. Congress in the first CARES Act came out and built a bridge halfway. And now I think the Fed is going to increasingly and repeatedly beat Congress and warn them about what is coming. Specifically, the Fed vice chair, I didn't write his name down, I'm sorry. Lots of notes this morning. He's already quoted this morning as saying, without stimulus, we are going to have a hard year or a year and a half ahead of us. And really no one wants that. Mortgage rates and mortgage apps. Mortgage rates set a new record. It was 3.01 last week. Now it's 3.0. Applications, mortgage apps, and purchase fell 2% collectively week on week, but they are still up 24% year on year, which is just amazing. The Apple event yesterday, love to hear what you have to say. I have this nice Apple phone, which I'm speaking to you through. I saw nothing that's going to make me rush out and buy one, but it is very likely I missed something, so let me know. One thing, though, it looks like this is a winner for is Verizon. Verizon looks to be distinguishing itself as the provider of 5G. I would argue that the Apple event, again, from what I saw, is very 5G oriented. So it will be interesting to see. This is, Verizon bet on 5G early. I believe they have the largest footprint now. Others are catching up. But it'll be interesting to see if Verizon picks up share as this rolls out. Let me know what you think. Not sure what you saw there. And then the last thing, because this is a real estate channel, we are starting to see information that really highlights what you and I have been talking about for months. And that is that the K-shaped recovery is real. The people on the top of the K are making financial decisions and taking advantage of work from home, their financial strength. They're moving out of expensive cities. Articles are saying it is very clear that New York, LA, and San Francisco are losers in real estate, and that the luxury home sales market is up 42% in Q3. What I really loved about this article is they did not pick some artificial number, right? $1 million home in the Bay Area is not $1 million home in pick a different state. So what they did is this report looked at the top 5% of sales for any market, right? So in the Bay Area, maybe it's 2 million. In Texas, maybe it's 800 grand. In Detroit, Michigan, maybe it's 400 grand. Whatever the 5% was for that metro, that is what they're calling luxury. So it's not an artificial number, which is awesome. It is metro by metro. And again, up 42%. The other thing that this article highlighted is that first-time buyers are struggling a little bit because of inventory, and more importantly, because banks are tight. Remember what we talked about JP Morgan 90 days ago now, maybe 100? They're tightening credit. And again, remember JP Morgan's announcement yesterday where they actually reduced loan loss reserves? Folks, all this stuff ties together. If you watch it long enough, it kind of tells you a story. And this is what's going on. So at the end of the day, thank you for watching. I had to do this early because it's important for me to make this one of the first videos you see. I am going to be interviewing Jonathan shortly, and then Anna after that. It is going to be a fun and exciting day. Make sure you share these things. Ask your friends to join. Love to see this channel, now that it's at 10,000, get to, what do you say, 12,000 by the end of December? Let's see if we can do that together. Hit that like button, subscribe, share it with your friends, ask them to join, post on Facebook. We talk about the daily financial news, real estate, every day. Take care of yourself. Have fun. Bye-bye.